Hello friends, you have seen the Lehman Brothers crisis, but this time it will be Layman Sisters Crisis. Yes, because the layman means the people who don't know much, and these are the guys, and these sisters are going to be hit like your aunts, your grandmoms, your sisters, your housewives who don't know much, and these are the guys who gonna hit because there is a crisis which gonna be havoc, creating a havoc across, and that is because this is a U.S. Treasury bonds that are gonna hit because a lot of holders of these bonds are the U.S. central banks, the central banks of all the countries like foreign institutes, which are foreign central banks that are going to be holding already $9 trillion of bonds. They are going to be hit out of this. These 5 trillions are the major countries like China, Japan, India, and European countries especially. These are the countries which are holding almost $5 trillion of bonds, and $5 trillion of bond, and they're gonna be hit. And then the US banks itself, $2 trillion bonds, and then the mutual funds, hedge funds of these fund houses of these US itself, that is again $2 trillion. They are going to be hit, and then there are retail investors, financial institutes, companies which are holding almost $9 trillion of bond. They are going to be hit because, guys, the whenever as the bond yields rise, which is actually happening, we predicted it last year, last April itself, that is going to hike. Now it is happening. Now the bond yields are rising. The 10-year bond is actually hit 4.5%. It used to be 1%, 2%. Now it's almost double. The 30-year treasury bonds have already hit 5% now, yesterday, already crossing 5%. So that is a big hit. And Bank of America, which holds some of the US treasury bonds, already facing 40% losses. And then the US, and because of all this risk, already US, the Moody's have already downgraded the US rating for the first time in the history, that is from AAA to AA1. You might think that, Ram, these all things we have been hearing for 1 year from you, and then almost 10 years from people, that everything will crash. But guys, this is happening. US ratings have never been decreased by Moody's, but this is the first time it happening. The banks, the big banks of US, like JP Morgan, Bank of America, and even Wells Fargo, which is like SBI of India. I mean, they have a lot of savings account. They are very least risky bank that is losing the AAA rating. Is a very big thing, guys, and that, I would say, it's a big downgrade, and this is going to continue. Many banks, many countries, many central banks will lose a lot of ratings, especially their instruments, basically like the bonds. So those are gonna hit crazily, and that will downgrade. The cost of borrowing will increase. It will be a systematic crash. So as guys, whenever there is a crash like a Lehman Brothers crash or a 2000 crisis, the COVID crisis, what you have seen, every time they will print the money, they will issue the bonds, and they will save the market. But this time the issue itself is bond, so they can't print more. So which means there is no escape, guys. There is no escape. They can't take it from a tree and give you. It's not possible. So the bailout is not possible here. Everything has to crash, and that is the Trump plan as well. We have been drilling the Trump plan decoded in our video. If you haven't watched it, watch it. And that is exactly is happening. It's all rolling up as per our predictions, and it's gonna be happening. Everything, when all these things happen, whenever there is a havoc in the market, US Treasury bonds and gold is what people rush to. But then, because this time the US Treasury bonds is collapsing, to the money will run to either stock market and gold. And because people know that the stock market will also eventually fall, because the economy will fall, and there will be a financial crisis, will be hitting the banks profits, and they think share market will anyways goes down. So the only asset that is remaining is in the US would be gold, and that is why there will be a mad rush. And also because the dollar will be reevaluated against, because of the bonds crisis, the dollar will be reevaluated, and that means the dollar will be falling against the gold, and that means the gold prices are rising. That's what it means. It's measured against each other. So that's why the gold will be rising normally as well, and the dollar will be falling, so the distance will be more, and then the gold prices will keep skyrocketing like anything. And the collapse can anytime happen in any of the banks. It could be a systematic collapse. This time it will be AI driven, it's machine learning driven, and every decisions will be in a flash crash. So it's not like you will have time to react. You will not have time. So if you have money in the share market, your layman sisters have money in the FDs, your pension funds, your junk LIC policies, apart from the term insurance, and a lot of other junk investments, then you have to remove those and put it immediately in gold and hedge it. If nothing happens also, you have to take the you have to safeguard this risk, because this is the time everyone will rush for the gold. Already China is doing that. Our Indian government has decided that it's not going to do, because $70 billion of gold is what we have. And though we have $700 billion of forex, we are holding that $500 billion in currencies. And then out of this 200 to $300 billion is in US dollars and the bonds, and these are going to collapse, and we are not doing anything for that, unfortunately, apart from dumping those in the market to whenever there is a currency crisis that is coming. So but we are not buying gold, and that is a problem in India as well. So that's why Indian market also is going to be hard hit. The reality will be suppressed for long, but not very long, because there will be a world global monetary reset. There is a financial crash. There will be a systematic failure. There will be collateral damages. And tell you guys, gold, physical gold, doesn't have the collateral damage. In this entire collateral damages game, there is only one asset which doesn't have a collateral damage, that is gold, and within the bank. So bank will rush for that collateral, and because they will lose trust on each other as the banks collapse, because they don't know which bank is also collapsing. So immediately they will start dumping their dollars and trying to, well, when one bank does that, the second bank will repeat, and it will be a chain reaction that will happen, and will be in hyperloop. As a normal individual, may not even get a chance to buy the gold, and that is why you have to buy it now. You are very lucky that you are getting a second chance to buy a gold where prices have increased. But by now it would have already, ideally the gold would have already double by now, but it has not yet happened, which you are lucky. So go and buy gold, because that is the only savior for you. It's the safest bet you can do right now is gold.